Hi there, I'm Mark Anderson. I'm a mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, so no matter where you are in the United States, whether you're looking at a purchase mortgage or a refinance, please do call or text me at the number below anytime. This is a no pressure, no obligation, no fine print, no cost, no nonsense type of deal. Call me, we'll have a conversation. I can give you some options. If you'd like to work with me, great. If not, I'll be glad to have had the opportunity to have had the conversation. So today I'm starting a series called The Chickens Will Come Home to Roost. What I'm doing in this series is I'm making a comparison between the natural tendency of my chickens, and all chickens, to as soon as the sun starts going down, it's actually kind of amazing, all of them will just kind of at the same time go, it's time to come home to roost. And they do. You shut the coop door, repeat the next day. It's a simple, natural process. Now, I could throw up a bunch of barriers and things in their way, and it's not going to negate the natural underlying instinct that those chickens have to go home. And I'm making a comparison here between that phenomenon, as ridiculous and silly as this might seem, between those natural forces that drive those chickens home and the natural underlying forces that operate within the economy that are going to push and pull things in certain directions. Now, specifically, I'm going to be talking about things that are going to impact the housing economy and mortgage rates over the next, let's say, 12 months or so. Just some things to keep in mind. Now, what I'm going to be talking about today is a very simple phenomenon. Might even call it a law. It's probably going a little too far. But there's a simple phenomenon where the typical person that's looking to buy a home, unless they actually have the cash in the bank, if you're looking to get a mortgage, what you're really buying is not the sales price. You're buying a payment. You're buying a payment that is comfortable for you and your family's budget. Now, generally speaking, I'll start my consultation with new purchase clients, and I'll say, look, I don't want to talk about sales price yet. I want to talk about your family's budget and what you can comfortably afford given your lifestyle costs, given your expenses, given your income, on what is actually going to be a comfortable payment for you. And we can use that payment as a way to determine what sales price that actually really matches up with. Now, one interesting thing to keep in mind with this, and the reason why I'm leading with this subject, is that prices for homes over this last year have gone up something like 11%, just over a year. And one of the arguments I'm going to make here is that one of the reasons for that is that interest rates went really, really low. So all of a sudden, people that maybe would have never considered paying, I don't know, let's use the example here of $300,000 on this purchase price, maybe they would have never considered that. But all of a sudden, because the rates got low enough, wherever they were comfortable with their monthly payments, all of a sudden $300 was matching with what they can do from a comfort standpoint, from a budgeting standpoint. And what's going to happen now, and this is, I think, very important to keep in mind going forward, it's been a really tough year for anybody to actually land a contract. There has been, and this is another video I'm going to go into, the main issue has probably been the fact that the inventory of homes that are for sale is particularly low. That has meant that the demand on the buy side has exceeded the supply. So that's one of the forces. But going along with that, the simple fact that the rates were as low as they were meant that you had a lot more demand at price points than maybe you otherwise would not have had. So let's take a look at what could happen to a theoretical person looking to buy a home. And let's say they've established a monthly payment comfort range of $1,800. Now, in this scenario, I'm actually pulling up part of a spreadsheet tool that I send my purchase clients that I tailor to everybody's specific loan scenario. And what this spreadsheet does is allows you to calculate your payment. So what we're going to do is we're going to take a look at what happens to this particular $300,000 scenario if the rates go up higher than where they are right now. Now, where did I get this 3.125 rate? That coincides pretty well with the Freddie Mac rate survey for the end of last week that indicated that the average rate across the United States was approximately, I think it was like 3.13%. So I just rounded down to the 3.125 level for illustration purposes only. This is not a mortgage quote. Don't get that wrong. But that's the average rate across the United States according to Freddie Mac. If that rate goes up, you can see here in this scenario between the taxes, the insurance, the private mortgage insurance, at that rate, your total payment on this comes out to $1,763. Now, let's say this client had established kind of a line in the sand. I don't want to go over $1,800. So at the rate of 3.125, hey, we're golden at the $300,000 price point. But let's see what happens if rates go up a full percentage point, which, by the way, I think that that's totally within the realm of possibility. I would dare say it's even likely that, let's say, a year from now, I think it's very likely that we could see rates that are a percentage point higher than where we're at right now. All of a sudden, that $1,763 overall monthly payment turns into $1,924. Now, maybe that doesn't sound like a lot to you, and it's possible that it doesn't. But for a lot of people, that's going to mean the difference between being able to justify a $300,000 purchase price and not able to justify a $300,000 purchase price. And if you think about the number of people that that's going to impact, I couldn't tell you how many, but it's going to impact enough people that there's going to be a natural pressure put on prices to go down. Because all of a sudden you simply do not have the demand size at the $300,000 price point, because there are going to be a number of people that it all of a sudden got too expensive for them just due to one variable changing. So I think this is really important and interesting to keep in mind how the interest rates impact prices. I'm not making any firm predictions here in terms of what percentage impact this is going to have. Ultimately, it's a rather complicated formula that's probably darn near impossible to calculate with any accuracy, given the sheer number of variables involved, the sheer number of things that could change in addition to rates. But I do think it's very important to keep in mind that this is a very important factor that is going to have a pretty significant impact on the housing economy this year as we do see rates come up. All right, so what am I really saying here on the individual level? How should you take this information to inform your plans over the next 12 months? Let's say that you are a person that's considering purchasing a home. And you've just watched this video and you've seen, well, Mark appears to be saying that prices are maybe at a peak and they're probably going down. So maybe it's silly for me to buy a home at all right now at the peak of the market. And this may be unusual to hear from somebody in the business of selling mortgages, but I do think that there's a good segment of the population that maybe should not buy a home at the peak of the market. Maybe you should put these plans off. But your best hedge against the risk of buying in a seller's market and potentially selling in a buyer's market down the road at a lower price, your best hedge against that is to plan to own the property for a long period of time, or at least long enough to ride the wave back toward an overall net appreciation between what you paid and what you sell for. So if you would like me to take a look at any mortgage scenario, purchase, refinance, whatever it is, give me a call, shoot me a text at the number below anytime. Please also do like the video, subscribe to my channel, and please share this content with anyone that you think might find it useful. Thanks so much for watching. Have a great day.